Hi friends, welcome to the accounting class. Today we are going to discuss about accounting equation. As you know that accounting equation is a mathematical expression of the accounting transactions. It is the basic or the fundamental accounting skills or the accounting ideas given to the students, those who are the basics to the accounting, or first they are learning what the accounting is. When the students are going to understand the accounting transaction, they could not follow that what are those things to be recorded in the business. So the accounting equation has been designed with a view, with a keeping in view or keeping in mind that students will easily record the transaction in the form of a mathematical expression, a mathematical equation. So that is accounting equation. Accounting equation is the assets equals to liabilities plus capital. That means the total assets of the business is equals to the total liabilities and the capitals. The liabilities is the loans or the debt of the business, and capital is the amount invested by the owner in the business, and assets is the property owned by the business with which the business carries the transactions. So this is the accounting equation. So let's take those examples of the transactions, how that accounting equations is shows their effect, the assets and equals to the liabilities plus capital. So after discussions, after showing of those transactions, we'll discuss that how this accounting equations helps to understand the basic accounting rules or the principles. Let's come to see the effect of accounting equation, that is assets equals to liabilities plus capital. So the first transactions I have taken, this is Ram started business with cash rupees 50,000. So here cash is the assets, so we'll write in the assets, it is cash 50,000, which is equals to your liability is 0 plus cash started with by the business. The Ram started business. Ram is the owner of the business, so he invests money, so that comes capital 50,000. This is capital 50,000. This is the first equation. Then second equation, purchase goods rupees 10,000 for cash. That means the second assets is coming, that is goods, that is 10,000 purchased for cash. That means from cash it is subtracted 10,000 rupees. So after the second transaction, the equation follows like this. So 50,000 minus 10,000, 40,000 cash, goods 10,000 equals to liabilities 0, capital 50,000. Then comes to the third transaction, that is sold goods costing 8,000 for 9,500 for cash. That means 8,000 goods costing. From the goods, 8,000 is subtracted, cost price is subtracted, purchased goods sold goods cost price, purchased goods cost price, cost price is subtracted. Sold for cash 9,500, that is cash is added. Then difference is 1,500 profit, it is added to the capital. So 1,500, this is profit, it is added. So after this transaction, the accounting equation is like this. This is 40,000 plus 9,500, 49,500 plus 2,000 goods equals to liability 0, that is capital 51,500. So this is profit. So then comes to the fourth transaction, wages paid 1,500. So wages paid in cash. So from cash it is 1,500 subtracted. Expenses decreases the profit. So direct subtracted from capital 1,500. It is expenses. So after this, the accounting equation is like this. This is cash is 48,000 plus goods 2,000 equals to liability 0, capital is 50,000. So 48,000 plus 2,000 goods, 48,000 cash, 2,000 goods remains equals to liability 0, capital is 50,000. So equation assets equals to liabilities plus capital. Then comes to fifth transaction, purchase machinery 35,000 on credit. So machinery is purchased. Machinery is a asset. New asset is created. Machinery 35,000 purchased. It is purchased on credit. So creditors. There is 35,000 is created. So after this, the equation like this. This is 48,000 cash, goods 2,000, machinery 35,000 equals to creditors 35,000 plus capital 50,000. So this is the accounting equation. After the machinery purchased on credit, that is the equation will be 48,000 cash remains, 2,000 goods remains in your hand. Machinery comes new asset, that is 35,000 equals to create new creditors, liabilities 35,000, capital 50,000. So comes to the last transaction, cash 1,000 drawn for personal use. That means cash decreases 1,000 drawn for personal use means that is the drawings. So subtract from capital is 1,000 drawings. So after this transaction, your accounting equation is assets 47,000 cash, 2,000 goods plus 35,000 is machinery equals to 35,000 creditors plus 49,000 is your capital. So this is the balance. So this is the total assets 47,000 cash, that is the cash, 2,000 goods, 35,000 machinery. So that is 47 plus 2, 49 plus 35, that is 84,000 total assets equals to liabilities 35,000 plus 49,000 capital, that equals to 84,000. So this is the accounting equation. So now you will see this accounting equation shows the total assets equal to liabilities plus capital. So from this accounting equation, you might have noticed that when there is a increase in the cash, there is added, decreases in the cash, subtracted. So assets increases, added, decreases, subtracted. Capital increases, added, decreases, is subtracted. So liabilities new increases, added. So if liabilities, suppose the creditors will be paid, then it is decreases. So it will be subtracted. So this is the basic form of accounting equation which we had seen here, that total assets equals to total liabilities plus capital. Now you see this accounting, from this accounting equation we can clearly apply the accounting rules to record the transactions. So this accounting equation shows that for the assets we can show the roles of assets for accounting equation. Suppose this. So there is the rules. What we had seen, that increases in assets is debited. Decreases in asset is credited. So from the accounting equation we know the basic accounting rules, that is increases in the asset, that is debited, decreases in the asset is credited. How? That means we have seen that when there is a purchase of goods for cash decreases. So cash decreases means that is credited. So when we have seen we have seen the first equation, first projection, that is Ram started business with the cash. Business receives the cash means increases in the cash or the asset. Cash is asset. So increases in the asset, that is debited. So this is the rules of accounting equation. Let's see. Then expenses increases is debited, expenses decreases is credited. So this is the accounting rules for the expenses. Any expenses increases is debited because it increases. So that is the expenses decreases is credited. So likewise, there is the incomes increases credited, income decreases is debited. So this is for the incomes. We have seen that incomes means there is a goods sold for, first thing, this 8,000 sold for cash 9,500. There we had earned the profit of 1,500. Increases the profit, that is credited. Decreases the profit will be debited. If there is a loss, it will be debited. So likewise for the liabilities, increases is credited. Liabilities decreases is debited. Capital increases credited, capital decreases, is debited. That is the rules of accounting equation. From the accounting equation, we have understood the rules for the liabilities also and capital also. If there is a liabilities increases, that is credited, means added. Liabilities decreases is debited. That means subtracted. This is added. This is added. This is subtracted. This is added. This is subtracted. This is added. This is subtracted. This is added, this is subtracted. So this is the accounting rules what we have derived. That is the rules of debit and credit. So these are the accounting rules for the accounting equation, and according to these rules is to be applicable for the modern approach of the accounts. Rules of debit and credit. Now this accounting equation will be shown in the balance sheet like this. This is assets, this is liabilities plus capital. So this is capital, this is creditors or liabilities. This is assets, current assets, and fixed assets. So this is the accounting equation, shows that liabilities plus capital equals to the assets. So capital, wait. In there, capital 49,000. Last is the balance is shown. That is 49,000. That is creditor 35,000. Machinery. That is 35,000. Machinery. Goods plus cash. That is 49,000. That is the current assets shown. So this is the way by which the accounting equation presents the accounting transaction for the simple recording of transactions. So through accounting equation gives the basic idea of the accounting skills for recording of transaction very systematic and very accurate manners. So hope this is clear to you and you will understand it for the doing of accounting equation. Accounting equation is the basic and the rules is the fundamental thing which helps for the recording of transactions. Thank you.